Question number 16. Lease rental under different lease structure. First, a basic problem. How to calculate lease rental under different lease structure? Equipment cost 50 lakh. Lease term is 5 years. Gross yield 20%. That is your required rate of return. Find the lease rental under the following structure. Find the lease rental under the following structure. Equated year-end rental. This is the simplest. Equated year-end lease rental. So 50 lakh rupees you have to recover in 5 years, which should give you a rate of return of 20%. Charging equal rent every year. B is equated annual rental in advance. These two questions are same, but here the lease rental will be received at the end of the year, beginning of the year. So here the annuity factor of 1 to 5 you will take. Here annuity factor of 0 to 4 you will take. Stepped up rental. Stepped up rental, annual growth rate 10% per annum. Lease rental will increase at the rate of 10% per annum. First year, if it is X, second year is 1.10x, like this. So you have to find out the lease rental of each year. Then deferred rental. Deferred rental means in this example there would be no rental for the first and second year, and then equated year-end rental. So third, fourth and fifth year lease rental will be same. So here you will take annuity factor of 3 to 5. 3 to 5. Balloon structure. Rental would be rupees 2 lakh at the end of each year for 4 years. 1, 2, 3, 4. 2 lakh rupees per annum, and followed by a huge rental at the end of 5th year. So what you have to find here? The 5th year rental. You have to find here the 5th year rental. The missing figure is what should be the lease rental of the 5th year. And the last 6th type of situation is rentals are stepped down by 10%. Means every year the rent will decrease by 10%. Wonderful. Amazing. Write down. First write down case 1. Equated year-end lease rental. Case 1. Equated year-end lease rental. Equipment cost. Equipment cost upon PV annuity factor. Equipment cost upon PV annuity factor. PV annuity factor you will take 20% and 5 years. 20% 5 years. Solve. सबको आगे बैठाओ. So what is the answer for this? First check annuity factor. Is it 2.9906? 2.9906? 2.9906. This comes to 16.72 lakhs. Is it right? 16.72 lakhs. Any query on first answer? How do you solve the second answer? Same format, but the annuity factor will be from 0 to 4. Write like this. Case 2. Case 2, equated annual rental in advance. Equated annual rental in advance equal to equipment cost divided by PV annuity factor, PV annuity factor 0 dash 4 years, 0 dash 4 years comma 20%. How much is that? 50 divided by 3.5887. Haji? 0 dash 4 year, do you know how to compute? First you compute 1 to 4 and then add 1. Is it 3.5887? Answer 13.93, 26 lakh. Take the answer, it was your homework. You should have done it, but you don't take any efforts to try. But some of you have done, that's good. Stepped up rental. Stepped up rental. Now what is stepped up rental question? Lease rental will increase by rupees 10% every year. So write down heading first. Let us assume lease rental for the first year be X. Let us assume lease rental for the first year is X. Let us assume lease rental for first year is X. Now what I'll do, first I will calculate lease rental of next 5 years and discount them. The present value of the future cash flow, present value of future cash flow discounted at 20% should be equal to 50 lakh. Should be equal to 50 lakh. If yes, you have earned a rate of return of 20%. If PV of cash inflow is equal to PV of cash outflow, your rate of return is equal to the discount rate that you have used. Your IRR is equal to 20% in that case. Solve year 1, 2, 3, 4, 5. Year 1, 2, 3, 4, 5. Lease rental, how will you write lease rental? First year you write down X. Then 10% more than previous year. So it will be 1.1x. 1.1x. Then again 10% more than previous year. 1.1 plus 10%. 1.21x plus 10%. 1.331x plus 10%. 1.4641x. Right? These are the rentals for next 5 years. Those who have done, write PV factor. 1 divided by 1.20. 0.8333. Again press equal to 0.6944. Again press equal to 5787, 4823, press equal to 4019. What you will do, multiply and take total. Multiply, take total. Multiply and take total. Use memory plus function. What is the total of the last column? If you are waiting to copy the total, but you will not take yourself. That's good. So what is the total? 3.5277 approximately. You can write in 2, 3, 4, 5, 6, 7 digits, no problem. What is this number? This is the present value of future cash inflow discounted at 20%. And this should be equal to how much? This should be equal to 50. If this is equal to 50, equated with 50, it means we have earned a rate of return of 20%. If PV of cash inflow is equal to PV of cash outflow, the discount rate you have used is the IRR. The discount rate you have used is the IRR. So the required rate of return is 20%. This number is equal to 50. So therefore X will be equal to 50 divided by 3.5277, 3009. 50 is equal to this number. So X will be equal to 50 by this number. Solve. What is your answer? 14.1734 lakh. 14.1734 lakh. Then point number D is deferred rental. Deferred rental means first and second year in this problem rent will not be paid, but third, fourth and fifth year rent will be paid. So how will you get the answer? You will divide by the annuity factor of third and fourth and fifth year. So write down lease rental is equal to 50 divided by PV annuity factor, comma, in bracket 3-5 year, comma, 20%. Three dash 5 year, comma 20%. So how much is that? 50 divided by 1.462834, something like this you are getting. 1 upon 1.20, press equal to 2 times. And then next 3 times equal to M plus also. Memory recall. So how much is that? 34.1802 final answer. That means this person has to pay 34.1802 in the last 3 years. This will give the lesser rate of return of 20%. What is the fourth question? Ballooned structure. Ballooned structure means last year a heavy rental will be paid. First 4 years the rent will be 2 lakh. So write down one heading, balloon structure. So we'll draw one table here, lease rental, present value factor at the rate of 20%, and DCF. What is DCF? Discounted cash flow. Wait. First 4 years lease rentals are constant, 1-4. Save time. How much you are going to pay? 2. Calculate the annuity factor for 4 years, 20%. For 4 years, 20%. Yes, you. You're not moving only. 2.5. Bas, 2.5. 887 is also there. That's good. But it was so much troublesome to answer 2.5887. Yes or no? Socha 2.5 bolo khatam karo. Don't round up so much, you are a student, not Anil Ambani. Multiply 5.1774. Next, year 5, factor 0.4019. And what is the rent you will write here? That is right. It is missing number, so we'll assume for the time being it is X. Now you understood the trick. You can do 2-3 homework. Multiply 0.4019X. Take the total of last column. Yes, what is the total? 5.1774 plus 0.4019x. Some people have added this number to this number. Amazing, unbelievable. You can't add these two numbers directly. These are separate number. Yes or no? This number again equate with 50. Every problem will solve in the same manner. The present value of future cash inflow should be equal to 50. So how much is that? Final answer, 111.526 lakhs. Okay. That means the last year lease rental will be a huge amount. 111.526 lakh. One more question. What is the last question? Rentals are stepped down by 10%. Rentals are stepped down by 10%. At least one question solve yourself. Give me the answer of first year lease rental. Give me the answer of first year lease rental. Here lease rental will decrease by 10% every year. So I will give you 30 seconds to try your luck. Let the world know that you are an intelligent person. Please try. You can do it if you try. Over? Yes? Everybody has done. Some of you are still in work in progress mode. What is your answer? 19.667. Check. Step down lease rental. Case number 6. Write year, lease rental, discounting factor at 20%, DCF. Year 1, 2, 3, 4, 5. Okay. First year assume X. Second year 0.9x. Have you written 0.9x? Third year 0.81x. Fourth year 0.729x. Very good. Fifth year 0.6561. If you have got this right, then your answer would be approximately right. Factor you can copy from one earlier question and multiply. After multiplying, check the total only. 2.54229.029x. You can write in 3-4 digits only. This number you check first. If it is right, then equate this number with 50. Therefore, x will be equal to 50 divided by this factor which you have got here, 2.5422. So your answer is approximately rupees 19.66731 lakh. Is it right? So make one summary also. Summary. Year 1, 2, 3, 4, 5. And lease rental. Lease rental in year 1 will be 19.66731 lakh. So what will be in the second year? Minus 10% you do on your calculator. Minus 10%. So second year lease rental will be minus 10%, yes, 17.7003, no problem. You can write in 2 digits, you are writing in lakhs. Next, minus 10% again, 15.93, okay, 93, okay, minus 10% on your calculator, 14.33, and minus 10%, 12.90. So in the exam, you will write all 5 numbers. Just go to that question number C here, stepped up rental. Remember stepped up rental? There also what we'll do, we'll write the summary. We have not written. Summary. Just I'll require 2 lines. Year 1, 2, 3, 4, 5. And lease rental. In the first year, write 14.1734 plus 10% on your calculator, plus 10%. 15.59, okay, plus 10%. Be active, huh? 17 point, okay, plus 10%. 18 point, okay, plus 10%. 21 point, 20.75. ये लीजिए, answer is over. Now try one classwork. Question number 15. On your own. Only change the numbers. Question number 15. Those who want to copy will wait and wait only. You will be given 2 minutes to complete the entire answer. 2 minutes have already started. Try to do in 2 minutes. Full speed. Over. 2 minutes are over. Over, everybody. Check the answer now. Check. Yes, answer. First part. Rentals are stepped up by 10%. Just tell me the first, what is the answer? Is it 25.088? Tick mark. Give yourself half mark. 25.088. And then have you prepared the summary? Summary. 1, 2, 3, 4, 5. What is the lease rental in the first year? You've written 25.088. Second year? 27.60, okay. 59, okay. 30.35, fourth year. 33.39, then 36.73. Then check the second answer. Lease rentals are stepped down by 10%. Done? Ready to check? So the answer is 35.3892. Is right? Have you prepared this summary also? Answer? Year 1, 2, 3, 4, 5. Lease rental 35.3892 minus 10%, 15%. And how much minus 10%? 31.85. Then 28.67. Very good. 25.80. 23.22. Is right? Ballooned with lease rental for 1 to 4 years is 5 lakh. So you have to find the fifth year answer. Anybody fifth year answer? 172.42. Check the answer. 172.42 lakh. Tick mark. Half mark again. So total you got 1.5 mark. Is it right? So these were easy questions. They have stopped asking such questions 20 years ago. Now, that was warm-up exercise. Let us meet ICI from a close distance. Question number 1. Read question number 1. Read question number 1. ASF Limited is considering the acquisition of a personal computer costing rupees 50,000. Okay. This time the question is from Lease's point of view. The effective life of the computer is 5 years. The company plans to acquire the same either by borrowing rupees 50,000 from its banker at 15% interest per annum or by lease. The company wishes to know the lease rental to be paid annually, which will match the loan option. So this is your question. Company wishes to know the lease rental to be paid annually, which will match the loan option. So this is called break-even lease rental. Break-even lease rental, BELR. You have to find that lease rental which will give you the same present value which will be given by the loan option. So first you have to solve the problem under loan option, find the PV of cash outflow. And the PV of cash outflow under leasing option should also be the same. The following further information is provided to you. The principal amount of the loan will be paid in 5 annual equal installment. Principal amount of the loan will be paid in 5 annual equal installment. So 50,000 divided by 5. 10,000 rupees will be paid every year. So what will happen to the interest? Interest will keep on reducing every year. Interest will fall every year. First year you will pay on 50,000. Second you will pay interest on 40, 30, 20, 10. Point B, interest, lease rental, principal repayment are to be paid on the last day of each year. The full cost of the computer will be written off. Full cost means entire 50,000 will be written off over the effective life of computer on a straight line basis, and the same will be allowed for tax purpose. Point D, the company's effective tax rate is 40% and the after tax cost of capital is 9%. So we will take 9% discount rate. We will take, in any case, if you compute after tax cost of debt also, which is 15% interest rate, and 40% is tax rate, then also it is coming to 9% only. So either you can take on your own or given, both are 9%. So this time there is no problem. The computer will be sold at rupees 1700 at the end of 5th year. This is salvage value. This will be if you purchase the computer, not the lease option. Commission on such sale is 9% of the sale value and will be paid. So basically you have to find out net salvage value. Net salvage value will be 1700 minus 9%. 1700 minus 9%. 1000. 1547. 1547, very good. So point number E, net salvage value 1547. This option or this amount you will write in loan option, not in lease option. You are required to, they are repeating the question, compute the annual lease rental payable by ASF Limited, which will result in indifference to the loan option. Which will result in, so we have to find break even lease rental. That lease rental at which PV of cash outflow under both the options are same. And to help you, they have given you discounting factor also. So you will also use the same factor. So that answer will tally with the institute. Okay, if the factors are given, it is advisable you will follow same factor, so that your answer matches with institute answer and they will give you more marks. Now write down first option 1, borrowing. Option 1, borrowing. Under that write down present value of cash flows. Next line, that present value of cash flows. For borrowing option, all details are available. Cost of the asset, borrowing, installment, interest, depreciation, salvage. So can I compute the present value under borrowing option? First you do that. Write down format, year, particulars, cash flow, discounting factor at 9%, discounted cash flow. Year, particular, cash flow, discounting factor at 9%, DCF. So the purpose of this format is to find out the present value of cash flow under loan option. Right? So first you write whatever is given to you. Year 0, cost of the computer 50,000. Year 0 borrowing also 50,000. These are the two cash flows in year 0. Then 1-5, repayment of principal amount of loan. Repayment of principal amount of loan. How much will you write? 10,000 in bracket. Why 10,000? 50,000 divided by 5 years. 10,000. 1-5. One more thing. Tax shield on depreciation. What is the method of depreciation? Straight line method. Plus one more instruction is given. Full cost of computer will be written off. When they say full cost will be written off, means do not consider salvage value. Just write off 50,000 first. Salvage value will discuss separately. Full cost of computer will be written off. Follow the instruction. Do not apply your own intelligence when the problem is giving you some instruction. Full cost will be written off. So no question of deducting depreciation. Salvage. 50,000 divided by 5. What is that? Depreciation. Depreciation into tax rate. Tax shield on depreciation. How much? 4,000. Wonderful. Next. Interest rate interest net of tax. Now here I will not write 1-5. Please answer why. Amounts are different. Amounts are different. Here the amounts are same. So you will write 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Salvage value of computer. Fifth year, write down salvage value of computer, net of tax and commission. Net of commission and tax. Commission will deduct, that is mentioned. Tax also will deduct. Because salvage value will attract capital gain tax. Okay. If you don't want to deduct tax, then write an assumption accordingly. If you want to deduct tax, write an assumption accordingly. What will happen after 5 years, we don't know. Yes or no? Whether block will be there or not. So according to your assumption, your answer may change here slightly. So we will assume sale will attract capital gain tax. Now, working note number 1. What is working note 1? Calculation of interest net of tax. Calculation of interest net of tax. Calculation of interest net of tax. First write down year. Year. Second write down principal sum outstanding. Third write down interest at the rate of 15%. Interest at the rate of 15%. Fourth write down tax shield at the rate of 40%. And fifth write down interest net of tax. Interest net of tax. So I'll explain. First write down year. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Principal sum outstanding. First you write 50,000. Every year 10,000 will be paid. It will reduce. Minus 10,000 without calculator. Very good. Then 20, 10. Calculate interest at the rate of 15%. 7500, 6,000, 4500, 3,000 and 1,500. Is it right? Tax shield on interest at the rate of 40%. First number 3,000. Second 2,400. Third, fourth 1,200. Fifth 600. Now last column net of tax. This minus this. First number 4500. Second number 3600. Try. Third year 2700. Fourth year 1800. Last year is it 900? Take these numbers, transfer to main page, and in the main page you will write positive or negative. Negative, because you are paying interest. So all figures on the main page in bracket. Year 1 interest net of tax 4500, in bracket 3600, in bracket 2700, 1800, 900. Written. One more working note 2 write down. Working note 2. Salvage value net of commission and tax. Salvage value net of commission and tax. Right hand side rupees. First point A, write down sale value. What is the sale value of computer? 1700. Keep paragraph E in front of you. E. And then you have to also pay commission on sale at 9%. How much is commission? 153. Net consideration received. What is the net consideration received? 1547. Wait. What is the book value of computer after 5 years? WDV of the computer after 5 years is 0. All full computer cost you have written off. Sale value after paying commission is 1547. And book value is 0. So how much is the profit on sale? Same amount. The same amount is also your profit. So you have to pay tax at the rate of 40% on this amount only, because your profit is also 1547. Book value is 0. So whatever you realize is your profit. So 40% on 1547, 619. This will go to government as a tax. So what is left with you finally is 928. Net salvage value 928. Okay. Is it right? 928 is right. Now transfer it to the main page. After transferring to the main page, find out the NPV. Keep positive, negative number in mind. Check the total. Is it 33843? Yes. Yes. Now my question to this batch of highly talented students is, what should be annual lease rental that will also give you the same answer? That is 33843. Means the present value of lease rental should also be 33843, so that you are indifferent between the two options. Try. over. Anybody wants to answer? Yes. 8700 is partially right. I knew you will say 8700, but that is partially right. Yes, any other answer? Try. You are CA. If you will not do, who will do? So what you should do, 8700 is after tax value, divide by 60%, divide by 60%. Why 60? Tax rate is 40. So after tax value, 60% of pre-tax value. To get the pre-tax value, you have to further divide by 60%. Is it right? So some of you are only dividing by annuity factor. That will give you 8700. That you again divide by 60% to calculate the pre-tax value. You have to find lease rental pre-tax, not post-tax. What answer you have given? Post-tax. What answer I want? Pre-tax. Write down. Calculation of annual lease rental to match the loan option. Calculation of annual lease rental to match the loan option. Calculation of annual lease rental to match the loan option. Annual lease rental is equal to 33843 upon first divide by 3.89. That will give you annuity, but that is post-tax figure. Again divide by 60%. Tax rate is 40, divide by 60. If tax rate was 30, then divide by 70. If tax rate is 35, divide by 65. So the answer is finally 14,500. You can cross check also why this is right. 14,500 is the lease rental you will pay, but you will get tax shield on that. How much tax shield you will get? 40%. So minus tax shield 40%. Don't write 40%. 5800. So your net cash outflow will be 8700 multiplied by annuity factor 3.89. So present value will be 33843. So if the lease rental is 14,500, your answer is 33843. Therefore, you will be indifferent between the two options, because in both cases your PV of cash outflow is same. Okay. One more question. Question number 2. Question number 2. First read the problem, then start copying. Wait. A bulldozer, fast moving vehicle, which has a service life of 10 years, can be purchased for rupees 1,80,000. It can also be hired at the rate of rupees 45,000 per annum, payable at the beginning of each year. Underline, payable at the beginning of each year. So in this problem, lease rentals are payable in advance. Lease rentals are payable in advance. Operating costs are to be borne by the user. In both cases, whether you purchase or you take it on lease, you will bear the operating cost. So this line is irrelevant. This line is irrelevant. Why? Because it is same in both the option. In some question you will be given operating cost will be borne by the user in case of purchase option and by the lessor in case of lease option. Then it will make a difference in our answer. A contractor requiring the use of bulldozer only for a period of 2 years seeks your advice. Your advice underline. So after some time you have to advise. You are a CA, so you have to advise. You write down next line, if purchased, he expects to use it for 2 years and then sell it at 80% of the purchase price. So in this problem, the life of this bulldozer for contractor is 2 years. Even though it can be used for 10 years, but we require it only for 2 years. So for our purpose, only 2 years are relevant. 10 years will not come in our calculation anywhere. And in this question, the salvage value is 80% of the purchase price. So what is gross salvage value? Gross salvage value 80% of 1,80,000. 1,44,000. That's good. He can finance its purchase by his own resources to the extent of rupees 80,000. So in this problem, you are not going to borrow 1,80,000. Out of 1,80,000, 80,000 is your own investment. So how much you will borrow? And the balance by borrowing. The balance by borrowing means 1 lakh rupees you will borrow at an interest rate of 18% per annum. The interest on the loan is payable annually. When is the interest payable? At the end of each year. Means 18,000 rupees, 18% of 1 lakh. And the loan can be repaid out of the sale proceeds of the bulldozer. When will the loan be repaid? At the end of second year. In this problem, no installment. The entire loan will be paid after 2 years. At the end of second year, first you will sell the bulldozer, you will receive 1,44,000, and out of that you will repay the loan. For income tax purpose, depreciation is an admissible deduction at 25% on diminishing balance method. So rate of depreciation is 25%, method is WDV. Again different from previous problem. Previous question was straight line. So here your depreciation amount will change every year. And one more line underline, excess realization if any over the WDV is subject to tax. Okay. Previous problem was silent on this matter. We had assumed on our own that excess realization will be subject to tax. Here we don't have to assume, it is given. The effective tax rate is 35%. The contractor expected a minimum internal rate of 10% net of taxes on his own funds. So this is in short discount rate. This is in short discount rate. Prepare a suitable statement and advise the contractor indicating clearly the basis for your recommendation. So this is a choice between purchase or hire. Lease, hire, purchase or lease. Okay, whatever. So first I will write down option 1. Purchase the bulldozer. You will purchase the bulldozer by borrowing rupees 1 lakh, pay interest for 2 years, repay the loan after 2 years, sell the bulldozer after 2 years and claim tax shield on interest and depreciation. These are the cash flows. Calculation of present value of cash flows. Calculation of present value of cash flows. Calculation of present value of cash flows. First write down the format as usual. After that, we will write down all cash flows that you can first visualize, and if required, prepare working note. So year 0 cost of bulldozer. Year 0 cost of bulldozer 1,80,000. And in year 0 borrowing is 1 lakh. Do you want to write 80,000 rupees investment from our own pocket? No. The difference 80,000 is itself your own investment. Is it right? So we are investing 80,000 rupees in the bulldozer. Our own fund invested is 80,000. The difference itself is our own fund. Sometimes the student write own investment 80, then the amount will become 0 here. 1-2. What is 1-2? Interest net of tax. Working note 1. We'll prepare later. Year 1 tax shield on depreciation. Year 2 tax shield on depreciation. Now why I have written separately? WDV method. Amount will change. Tax shield will change. And in year 2 repayment of loan. That figure I can write here. 1 lakh. Repayment of loan. This loan will be repaid here. And year 2 one more thing, right? Salvage value of bulldozer. Net of tax. Working note 3. Salvage value of bulldozer. Net of tax. Working note 3. Because the problem says if there is a gain on sale, it is subject to tax. So how many working notes I will require? 3 working notes. First working note 1 write down, which is quite easy. Interest net of tax. Interest net of tax. Right hand side write rupees. Right hand side rupees. First write point A. Interest. Interest at the rate of 18% on rupees 1 lakh. Is it 18,000? And on that you will save tax. Less tax at the rate of 35%. Less tax at the rate of 35%. 6,300, that is tax saving. So what is interest net of tax? 11,700. Is it right? Go to the main page on your own. Write 11,700. 1-2 interest net of tax. Positive or negative? Negative. You are paying interest. Now write working note 2. What is the heading for working note 2? Tax shield on depreciation. Tax shield on depreciation. Year WDV, opening WDV, depreciation at the rate of 25%. Tax shield at the rate of 35%. Tax shield at the rate of 35%. Year 1, opening WDV 1,80,000, right? On that provide depreciation at 25%, 45,000, 15,750. How much? 15,750. Next year opening WDV is how much? 1,35,000. Depreciation 33,750. Tax shield on that 11,813. Go to main page. Main page, tax shield on depreciation. First year write 15750. Second year 11813. 11813. Okay. Now one more working note write down. This is positive. What is that next working note? Salvage value of bulldozer net of tax. Salvage value of bulldozer net of tax. Right hand side rupees. First 10 seconds you will get a chance to answer the final figure. 10 seconds starts now. 10 seconds. Time over. Anybody wants to show his skill? Final answer. Yes, madam. Would you like to answer? You're not sure? That's good. That is a sign of a good CS student. 73,000, anything is not right, huh? 277? No. Both of you have gone wrong. Yes, you. 129? 037 is right. 129037. Write down. First write down salvage value. Salvage value. One lakh 44,000. WDV on the date of sale 1,35,000 minus 33,750. Can you take some efforts and go to the previous working note and check the last two numbers? Is it there? So therefore, there is a gain. There is a gain. Salvage value is more than book value. By how much? Short-term capital gain 42,750. 42,750. And then tax at the rate of 35%. 14,963. Some of the lazy student, what they did, they saw these two numbers close to each other. They took the difference. No. You have to take inflow and outflows. This is a chapter on cash flow calculation, not profit after tax. I am not an accountant right now. I am a manager. Okay? But your thinking like an accountant will not change. You have sold the bulldozer for 1,44,000. Bank account debit to bulldozer. You will pay tax to the government 14,963. Modi account debit to bank 14,963. So what is left in your pocket? 129,037. Okay, please be little awake, alert, in spite of giving instructions so many times. Your net salvage value is sale value minus tax paid. See the highlighted figures. Okay, go to main page. Right there, 129,037. Last line. Positive number. Now, give me the NPV only. What is the answer of the first case 1? Yes, madam, try. Present value at least you can compute. Use discount rate 10%. What is the present value? Please try. 5229. 5229. 52,229 is right. 52,229 positive or negative? Negative. Okay. So how many of you got it right? Raise hand. At least 5 persons should get right so that I'll go ahead. Wow. More than BCom result. Next, option 2. Hire the bulldozer. Option 2, hire the bulldozer. Take the bulldozer on lease for 2 years. Take the bulldozer on lease for 2 years. Okay. Write down once again, calculation of present value of cash flow. Here no working note is required. You are going to pay 45,000 rupees per annum at the beginning of the year. So write down calculation of present value. Format is same. Year particulars, cash flow, discounting factor at 10%, discounted cash flow. Format is ready. Here lease rental will be paid in advance. In year 0 write hire charges 45,000. Year 1 hire charges 45,000. Tax shield I will write separately. Wait. First you understand these two numbers. Are these understandable? You are paying lease rental in advance. You require it for 2 years. So first at the beginning of year 1 you will pay 45,000. For time value of money purpose I will write 0 here. Then second installment you will pay at the beginning of second year, which is end of year 1 from today, for discounting purpose. Okay. What about tax shield on this? If you pay rent in advance, so you are paying rent in year 0 and 1. Tax shield on this item will arise at the end of the year, year 1. And tax shield on this lease rental paid will arise at the end of year 2, because you are paying rent in advance. So therefore we will write 1-2. What is 1-2? 1-2 tax shield on hire charges. Year 0 hire charges paid, tax shield will arise in year 1. Year 1 hire charges paid, tax shield will arise at the end of year 2. So in such problem we will assume if lease rentals are received or paid in advance, tax liability or tax shield will arise at the end of the year. So 1-2 tax shield on hire charges, 35% of 45,000. After doing that, compute the NPV. 58576. Check the answer. Compare the two answers. Compare the two answers. Which is lower? First answer is lower. So write decision. Decision will be the contractor should purchase the bulldozer. Contractor should purchase the bulldozer as the present value of cash outflow is lower. Contractor should purchase the bulldozer as the PV of cash outflow is lower. And second note, write down. Note, it is assumed that tax shield on higher charges will arise. Tax shield on higher charges will arise at the end of the year. Tax shield on higher charges will arise at the end of the year. Tax shield on higher charges will arise at the end of the year. Any query on question number 1, 2? 1 and 2? No? Okay. Now we'll come to question number 5. Very, very important. First they asked in May 2004 for 20 marks. And then they asked in November 11 for 8 marks only. And they have asked one more time after that. Because now the student have become smart. So from 20 marks, 8 marks now. Maybe next exam 2 marks only. AS Limited is considering to acquire an additional computer to supplement its time sharing services. It has two options. Option 1, to purchase the computer for rupees 22 lakhs. And option 2, to lease the computer on an annual rent payable at the end of the year. 5 lakh rupees plus 10% of gross revenue from time sharing service. So in this problem, lease rental is fixed plus variable. This is a new model of leasing assets now. If you charge only fixed, it becomes very expensive for the lessee. So many lessors are not able to give their asset on lease because lessee will not take so much risk. So he says, okay, you pay a fixed amount. At the same time, you give rental only if there is revenue. So 10% of revenue. So if you also earn more, you pay more rent. If you earn less, you pay lease rental less. Okay. So this way you can promote your business. If you charge him directly 12 lakh, he may not be willing to accept. Anyway, so after that general knowledge, next line, an amount of rupees 6 lakh is also payable at the end of year 3. This you will pay in every year, 1, 2, 3. Plus in third year, you have to pay one more item, 6 lakh rupees. Third year we have 3 payments, 5 lakh, 10% of gross revenue and plus 6 lakh under leasing option. So you have to be very careful with the numbers. The revenue from time sharing service are estimated to be 22 lakh 50,000, 25 lakh and 27 lakh 50,000 for 3 years. Why do you think it is given? The 10% of gross revenue. Will you write this while calculating PV of cash inflow also? Not required. Because revenue under both the options will be same. Whether you purchase or take it on lease. So therefore common cash flows need not be written. It is a waste of time. Computer has a salvage value of 10 lakh rupees at the end of third year. When will you write this? Purchase option. In purchase option there is an advantage. You can enjoy the salvage value of 10 lakh after 3 years. All this we will write properly. Annual operating cost, excluding depreciation and lease rental, is estimated at 2 lakh per annum, and an additional revenue expenses of 2 lakh is payable for training in the beginning of the first year. What is beginning of the first year? 0. For time value of money calculation purpose, we will write year 0 training cost. Both these costs are to be borne by the lessor in the case of lease. So if you purchase, there is a disadvantage. You have to pay operating cost every year 2 lakhs per annum. You have to incur training cost of 2 lakh in year 0. But if you take the asset on lease, then this operating cost and training cost will be borne by the lessor. So these two items will not come in the lease option. Funds for purchase are to be acquired at the rate of 16% and are repayable rupees 5 lakh, 8 lakh 50,000 and 8 lakh 50,000 at the end of 3 years respectively. So you will borrow 22 lakh. And how this 22 lakh will be paid? Just take total 5 plus 8.5 plus 8.5. Is it 22? So this way the principal amount will be repaid. So every year as you are repaying the loan, interest will reduce, like question number 1, and accordingly your tax shield will also change. The firm pays tax at the rate of 50% and provides depreciation at straight line method. So this depreciation benefit will be there in the purchase option. Okay. The question is which option is better? Right there, which option is better? Which option is better? Very simple question for 8 marks. But if you have 8 marks, it means you have about 15 minutes to solve. Okay. 5 minutes have gone in reading the problem. First option 1, write lease the computer. Option 1, acquire the computer on lease. Acquire the computer on lease. In this problem, there is a difference between this problem and the earlier 4 questions that you have solved. What is the difference? Discount rate is not given to you. Discount rate is not given. You can check. And you can check in the previous 4 problems, discount rate was given to you. So if you are a lessee, you have to make a choice between borrowing and lease. The discount rate to be used, write down step 1. What is the instruction I have given you? After tax cost of borrowing. 2 reasons for that. One is your cash flows are all predetermined. So therefore discount rate should not include risk premium. Second, cash flows are post-tax. Discount rate should also be post-tax. Formula for computing after tax cost of borrowing. Interest into 1 minus tax rate. Interest into 1 minus tax rate. 16 into 1 minus 0.5. So the answer is how much? 80 or 8? 8%. Very good. If tax rate is 50%, answer will become half. Yes or no? 16 minus 0.5 or 50%. So for both the answers, lease option, purchase option, we will use 8% discount rate. Is it right? If it is right, then right. Step 2. Calculation of PV of cash flow under leasing option. Sir, इतनी बड़ी चार्ट क्यों बनाया आपने? You will see. Calculation of PV of cash flow under lease option, right hand side, rupees in lakhs. So visualize what are the columns we are going to write. One column at least you should tell me. First one, year. Second column, fixed rent. Third column, variable rent. Fourth column, total rent. Then next column, tax shield on rent. Next column, after tax shield, what is the rent? Discount rate, present value. Is it right? So if you write in detail, you will understand better. Year, lease rental fixed, 5 lakh, 5 lakh, 5 lakh. Lease rental variable, 10% of gross revenue. Fixed plus variable, total lease rental. Tax shield at the rate of 50%. Lease rental in India is a tax deductible expenditure. Okay. So from financial management point of view, it's a good option to go for leasing option and save taxes. This is what we will pay for. This is what we will save. So lease rental net of tax is 4 minus 5. So this is my net cash outflow column, column number 6. And then you will discount it at 8% in present value. So one column you can eliminate is 7th number column. Directly you take column 6 and write present value at 8%. Okay. Keep one line blank after each year. Year 1 or 2 lines blank. If you can afford 2, then 2 lines. If you are very poor, below poverty line, then 1 line, then 3. Okay. First year fixed rent 5, second year fixed rent 5, third year 5 and plus 6 lakh also. It's written there. You have to continuously read the problem again and again so that you don't miss any number. 5 plus 6, 11. Lease rental variable. Lease rental variable. 10% of revenue. First year revenue is estimated to be 22.5 lakh. So write there in bracket 10% into 22.5 equal to 2.25. Next line. What is the next year estimated revenue? Second year 25. 10% into 25. 2.5. Without calculator. Without calculator. Try once at least 10% of 25. 2.5. Amazing. Next year try 10% of how much? 27.5. How much? 10% of 27.5. 2,75,000. 2.75. Very good. Now take total. 2.25 plus 5. Without calculator, madam, itna you can do. Okay, you are a CA. If you don't do this much calculation, who will do? I just don't understand why you need to use calculator every time for adding 5 plus 2.25. 5 plus 2.5 without calculator. 7. At least try, you will get it. 13.75. I had given you in one chapter normal distribution figure without reading the table. You can't do this 5 plus 2.25. Now 50% compute. without calculator, 7.25 into 50%. Try at least. Try. 3.625. Right. 3.75. 6.875. Now one shortcut. If your tax rate is 50%, this will also be same. You are just dividing 50% to you and 50% to government. Okay, government is your partner in business. Now 8% discount rate. And then multiply total. How much? Yes, 12.0286. 12.0286 is right. 12.03 is right. 12.02 is right. If you go for leasing option, this is your PV of cash outflow. Any query on this? Is it understandable? If you write in detail, later on you just have to read the answer from a distance, you'll understand. Too much of shortcut is not required. Person checking the paper may not understand what you are trying. Okay. Now write down option 2. Option 2. What is option 2? Loan. Option 2, write down loan. Option 2, loan. Now next line, PV of cash flows under loan option. PV of cash flows under loan option. PV of cash flows under loan option. Write properly, in detail, in good handwriting. Year, particulars. Good means you don't participate in a competition, at least understandable. Cash flow, discounting factor at 8% and discounted cash flow. First we'll visualize what cash flows are applicable in this problem. Year 0 you'll purchase a computer, you'll borrow money. In year 0 there is one more thing, training cost. If you purchase, you have to incur training cost. In year 0, beginning of year 1, you have to train your employees to use that computer. Is it right? Like in our classroom, we have trained the employees to use this kind of computers. It's not ordinary, you cannot use it. Right? For example, just standing here, I can switch off the projector. Computer ji projector switch off kar do. ये लो. कुछ किया मैंने? कंप्यूटर जी ऑन कर दो. So we are trained. Is it right? So training will be incurred in the beginning, not at the end of the year 1. By that time computer will crash. So write down. Calculation of PV of cash flow under option, loan option. Year 0, first write 3 items. Year 0, cost of computer 22. Cost of computer 22. In bracket write down. Year 0, borrowing write down. Year 0, borrowing 22 inflow. Year 0 borrowing 22 inflow you have written. Year 0 write training cost. Training cost is 2. Year 0 training cost 2 in bracket. If training cost is incurred in year 0, the tax shield will arise at the end of the year. Write year 1 next line. Year 1 next line. Tax shield on training cost. Tax shield on training cost. You will write 50% into 2. 50% into 2. 50% into 2. How much is that? 50% of 2. 1 lakh. Just write 1. Then write down year 1 CF80, year 2 CF80, year 3 CF80. In bracket working note 1 for all 3. Anything more in year 3? Anything more in year 3? Salvage value of computer 10 lakh. Salvage value of computer 10 lakh. Since we are going to follow straight line method of depreciation, the amount depreciated will be cost minus salvage value upon number of years. So after 3 years, the WDV of the computer will be 10 lakh. Sale value is also 10 lakh. So the taxation will be 0. Taxation will be 0 because WDV will be 10 lakh only after 3 years. So now write down one small working note 1 CF80. So tell me few items of cash flows which will be written in this working note. Few items. If you can imagine all, well and good. What are the cash flows over the next 3-year period? One is principal amount of loan payment, interest on loan, operating cost. Because you are owning the asset, you have to pay operating cost. So these are the 3 direct outflows. And there is one indirect benefit, inflow. What is that inflow? Tax shield on 3 items. Tax shield on 3 items. Which 3 items? Interest, second, depreciation, third, operating cost. So we'll add repayment of principal plus interest plus operating cost and minus tax shield on depreciation, operating cost and interest. So all this I will present it properly for understanding purpose. First right hand side rupees in lakhs. Point number, first column year. First column year. Second column loan outstanding. Loan outstanding, the purpose is interest calculation. And based on the loan outstanding, we'll write interest at the rate of 16%. Repayment of loan. Fourth column, repayment of loan. Fifth column, operating cost. Sixth column, depreciation. Interest, operating cost, depreciation. These are tax deductible expenditure. So write down tax shield at the rate of 50%. Tax shield at the rate of 50%. Now under that I have written one formula. 7 number column is equal to 50% of which 3 column? Column number 3, 5, 6. You will not get tax shield on principal amount of loan. And then what is column number 8? CF80. How will you reach that magic number 8? CF80 will be equal to 3 plus 4 plus 5. These are all outflows. And minus inflow. Minus 7. 3 plus 4 plus 5 minus 7. Okay. Column number you've written. Year column write one line blank after each year. 1, 2, 3. Loan outstanding first year 22 minus 5 minus 5. First year principal repayment is 5. 17 minus 8.5 minus 8.5. 17 minus 8.5. 8.5. Wonderful. Amazing. One day it will come in CA final, I have to add 1 plus 1, the student will take calculator, do 3 times, and then he will give me the answer. Yes or no? 17 minus 8.5 you should do yourself. Okay, interest at 16% on 22. 3.52. Okay. 17 into 16%. 2.72. 8.5 into 16%. 1.36. Very good. What is the repayment of loan first year? Second year? 8.5. Third year? 8.5. Operating cost. What is operating cost in first year? 2. Second? 2. Third? 2. Depreciation. First year. Depreciation first year. SLM method. Cost minus salvage value upon number of years. Yes. 4. Write down in bracket 22 minus 10 upon 3. 22 minus 10 upon 3. 4. Okay. Continue. Tax shield at the rate of 50%. Tax shield at the rate of 50%. 4.76, 4.36. Keep checking. First you have to add these three numbers, 3, 5 and 6, and then multiply by 50%. Is the answer right? Next, 3.68. 3.68 is right. Check the answer. If it is wrong, you are wrong. Correct. Last column, 3 plus 4 plus 5 minus 7. Do it yourself. Transfer the figures to the main page. Transfer the figure to the main page. Check the answer. Is it final answer 12.55? First to check the last column, 5.76, 8.86, 8.18. Is it right? Is it right? Are these positive cash flow or negative cash flows? In the main page, these are written as negative. You're right. Check the answer. Is the answer 12.55? Okay. Compare the two answers. Which is lower? First answer is lower. So decision write down. Decision. The company should acquire the computer on lease. The company should acquire the computer on lease. Now write down one note. What is the note? It is assumed that tax shield on training cost will arise at the end of the year. It is assumed that tax shield on training cost will arise at the end of the year. Tax shield on training cost will arise at the end of the year. In some books and in some answers, they have taken it in year 0 itself. Okay. So this note is required. Second note, write down no capital gain or loss will arise. No capital gain or loss will arise. No capital gain or loss will arise on the sale of computer. On the sale of computer, because book value of computer at the end of year 3 is equal to salvage value. Book value of computer at the end of year 3 is equal to salvage value. Okay. Then another important question, number 3 now, which is one of the most favorite questions of your most favorite institute. So many times they have asked this question. Third number. Every year they ask, once in 2 exams. Wells Limited is faced with a decision to purchase or acquire on lease a mini car. So what are the 2 choices here in this problem? Purchase or lease. Like previous question only. Only data is different. Some calculations will be different. But basic structure of the answer will be the same. The cost of the mini car is 1,26,965. It has a life of 5 years. The mini car can be obtained by paying equal lease rental annually. If you go for lease option, you have to pay equated annual lease rental. But they have not given you the lease rental amount. So today in the beginning we solved 2 problems, warm-up problems. Using that in knowledge, you will first find out how much will be the lease rental the lessor would charge. The leasing company desires a 10% return on the gross value of the asset. So you will take this number, divide by annuity factor of 10 year, 10% and 5 year. So that will help you to compute the lease rental. So that is why first 2 question I took was like this only. If lease rentals are not given, first find lease rental. Next line. Wells Limited can also obtain 100% finance from the regular banking channel. So you can borrow up to 126,965, 100%. The rate of interest will be 15%. And the loan will be paid in 5 annual equal installment inclusive of interest. So here also the institute has not given you the loan installment. The loan installment is an annuity, 126,965 divided by PV annuity factor. Installment will include interest also. Installment will include, it is different from the previous problem. Previous problem, principal was paid separately, interest was paid on outstanding balance. Here the installment is equal to principal plus interest, and the installments are equal. Total is equal in all 3 or all 5 years. So in that case, if I have to find the installment where installments are equal and installment includes interest, the formula is loan upon annuity factor. Is it a new formula? No. And in this case also, the answer will be cost of the car upon PV annuity factor. The difference is, this person wants 10% return, bank wants 15% rate of return on the loan. So accordingly you will calculate loan installment, lease installment. That is the difference. The effective tax rate is 40%. So that is applicable in both the answers. For the purpose of taxation, it is assumed that asset will be written off over 5 years on which method? Straight line. Good news. WDV is not there. Question number A, advise Wells Limited about the method of acquiring the car. So which option is better? You have to compute present value under purchase option, present value under lease option, compare the two, whichever is lower. Okay. Next line, B, what should be the annual lease rental to be charged by the leasing company to match the loan option? This is like question number 1. What should be annual lease rental to be charged by the leasing company to match the loan option? So one question we have solved today. That lease rental which will make present value under leasing option equal to present value under loan option. Present value under loan option we have already computed here. Divide by first annuity factor will give you post-tax lease rental. Divide by 60% again will give you pre-tax lease rental. Is it right? Classwork or homework? Classwork. Option 1, purchase the car. Option 1, purchase the car. So if you have to purchase the car, you have to pay equated loan installment to the bank, which figure is not there in the problem. The institute wants to test your knowledge of many things. So are you able to calculate installments or not? And this is simply based on time value of money. Similar question we solved in the first chapter, time value of money also. So cost of car upon PV annuity factor, bank wants 15% interest rate. So bank will design the installment which will give them 15% rate of return. Yes, wait, I think the factors are given in the problem. So all of you will use the same factor at 15%. Add 0.87, 0.76, 0.66, 0.57, 0.49, 3.35. Everybody will get the same answer. Is it right? 37,000? Yes. The instruction is same. If the factors are given, preferably use the same factor. Your answer will match with ICI answer. Option step 2 write down. That was step 1. Option 1, step 1. Now option 1 continues, step 2. What is step 2? PV of cash outflow under loan option. PV of cash outflow under loan option. Can we start now? Same format will draw. But wait, what is the discount rate? That is not given. Is discount rate given? So we will take after tax cost of borrowing as a discount rate, like previous problem. What is the interest rate in this problem? 15. Tax rate 40. 15 minus 40% of 15. 9%. So write 9%. After this you just write down one working note, discount rate. That is why in the question also 3 discount rates are given. 10% is given for lease installment, 15% is given for loan, and 9% is given to be used as discount rate. Okay? So year 0, first you visualize whatever you can and write here. Cost of the car, mini car, 126,965. Year 0, borrowing, same amount. In case if you are running short of time in the exam, then these two lines can be avoided if both are equal. If they are not equal, then write both. For example, in that bulldozer problem, the two figures were different, but here it is same. So maybe you can avoid it if you are running short of time. Then 1-5 write down annual loan installment. Annual loan installment. In bracket write step number 1. Go to step number 1. Check how much amount you had calculated. Is it 37,900? Yes. 1-5. Again 1-5. Tax shield on depreciation. If SLM method is given, then we can write in one line only, because each year the amount will be same. Cost of the asset is 126,965. Life is 5 years. Salvage value is 0. So annual depreciation will be 126,965 upon 5, and tax shield will be multiplied by tax rate 40%. Answer is louder. 10,157. Wonderful. Continue. What is spending now? Guess. Anything is spending? Guess. What is spending? Interest has already come under installment. But tax shield on interest. Tax shield on interest we have not yet calculated. Therefore, one more working note I will prepare below this. Tax shield on interest. Interest has been included in the installment amount, but tax shield on interest you can get as a deduction. So that calculation needs to be done. Write down working note 1, tax shield on interest. There is no salvage value in this problem. There is no salvage value in this problem. So tax shield on interest, and because you are paying installment every year, your interest will keep on changing, and therefore your tax shield on interest will also change. Hence this table. Right, first column, heading tax shield on interest. Working note 1, please write. Tax shield on interest. Next line, year. Loan outstanding. Loan outstanding. Interest at the rate of 15%. Interest at the rate of 15%. Installment paid. Installment payment. And the last column is tax shield on interest at the rate of 40%. These are the minimum columns you require to understand. Start your first column, favorite column, year 1, 2, 3, 4, 5. From where we will start? 126,960. The amount of loan that you have taken. In some problem, the amount of loan taken is less than the cost of the asset. Then you will write loan amount, not the cost of the asset. Okay, continue. Interest at the rate of 15% on this amount. 19045. Installment you are paying 37,900. On interest, you will get 40% tax shield. On interest, you will get 40% tax shield. Multiply 40% into 19045. 76161718 is okay. 7618. Welcome. Wait, first line is understandable. What about second line? How much should I write here? Any guesswork? 890? No. 108, 110. Now see, this is installment. It includes interest. I need to only reduce the principal portion from the principal portion. Apple should be reduced from apple. Okay. School level mathematics. If you reduce 37,900 from this number, you are not matching apple with apple. That installment includes interest. So remove interest first from that. Only principal amount you find out, and that you deduct from 126,965. Okay, as a CA student, you have to know some basic arithmetic. You are a number cruncher, you are the future of India, but etc. Now, so first number you just write working. Afterwards you will understand. 1,26,965 plus 19045 minus 37900. This way you can do. Opening loan, add interest accrued minus installment. So automatically what will happen? This interest will get deducted. Now take 15% on that. 16216. Right. Continue. Installment 37,900. Tax shield on interest 6487. Next year, yes, one more trial. What will be the loan outstanding at the beginning of third year now? Take this number, add interest accrued minus installment. So interest will get adjusted. Is it 86426? Yes, now you understood. This is the advantage of CA student. Once you teach them, they understand. And then they are willing for making the next mistake. $5186. Third year answer is 5186. Okay. Fourth year, what is loan outstanding? 61490. You should learn all this. Tomorrow you are going to borrow money for your office, so that nobody should fool you. 37,900. 3689. Now stop. In the last year, what I'll do, my loan plus interest should be equal to installment, so that I don't have to carry forward any more balancing figure now. So last year we will not calculate interest, we will take balancing figure. The balancing figure will be 37,900 minus 32,813. How much is that? 508687. Okay, 87, no problem. Some 1 or 2 rupee difference, you don't bother. The logic is simple. This is your last installment. After paying the last installment, the balance should become 0. So this figure, you write it as a balancing figure between first number and this number. Difference, whatever your notebook suggests, whatever your own calculation suggests, you take this number, this middle number is the balancing figure. And whatever you have written here, multiply by 40%. So you'll get 2034, 2032, 33, 1 or 2 rupees is okay. Now my job is almost done. Any query on this working note? Yes or no? No, then why you are waiting? Go to the main page, write down. Are these positive number or negative numbers? Positive. Multiply by respective factors. Find out the NPV. Yes, active. Use factor from the book. Over 87527. Write working note 2 below your first working note. Those who have completed, please write working note 2. If it is not written by you till now, discount rate to be used. Discount rate to be used is equal to interest rate into 1 minus tax rate. 15 into 1 minus 0.4 is 9%. This is working note 2 because somewhere you have to write in your answer discount rate that you have used. Okay. How many answers are over? Only one. Purchase option. What about leasing option? Are you given lease rental? No. Calculate. What is the desired rate of return of the lessor on the gross value of the asset? 10%. So option 2 write down. Option 2. Option 2, obtain the car on lease. Option 2, obtain the car on lease. But first I need to find out lease rental. Annual lease rental is equal to cost of car upon present value annuity factor. Cost of car upon present value annuity factor in bracket 10%, 5 year. Use the factor given in the question book. First add those 5 factors. Everybody should get the same answer. 33,500 is right. Write one note here. You have used 10% discount rate on the gross value of the asset. You have not taken into account the tax payment that the lessor may have to make, tax shield on depreciation which the lessor may get. So we will ignore tax adjustment for the lessor, because while deciding the rent, he will also take into consideration the tax payment and the tax shield that will arise. So we have not considered that. Otherwise we'll have to prepare a separate working note first, go to the lessor, see how much rent he will charge after considering his tax implication. It is assumed that after this one or two problem we'll go to lessor's book also. ठीक है? How lessors decide the rent, that we'll see after some time. It is assumed that the required rate of return of the lessor is pre-tax return. Which return? Pre-tax return. Hence no tax adjustment is made. To arrive at lease rental. No tax adjustment is made to arrive at the lease rental. Now write down present value of lease rental. Step 2, present value of lease rentals. Present value of lease rental. Year particulars, cash flows, discounting factor at 9%, discounted cash flow. Only one line. This time the lease rentals are payable at the end of the year. Tax shield will also arise at the end of the year. So I can write in one line only. Lease rental net of tax. You want to write two lines? One is enough? Yes. If the timing of both are same, we can write net amount. If the lease rentals were paid in advance, then I'll write two lines. 33,500 minus 40%. How much is the net amount? 20,100. Discounting factor already calculated in previous answer. Just go to loan option 3.89. Save time. Don't invent the wheel every time again. Okay, invent something new. So the answer is 78,189. Compare the two. Which is better? Lease option is better. Decision. Right below decision. The company should acquire the mini car on lease. Decision. The company should acquire the mini car on lease. The company should acquire the mini car on lease because the present value of cash flows, under lease option is lower. Cash outflow, present value of cash outflow under lease option is lower. Because present value of cash outflow under lease option is lower. There is one more question which we have already done in first question. Question is, what should be annual lease rental to match the loan option? We are the lessee. Our present value under loan option is how much? This figure on the screen, 87527. How much should be the lease rental which will match the loan option? Like earlier problem, you want PV of lease under PV of lease as 87,527. First you divide by the annuity factor. That will give you post-tax lease rental. Again divide by 60%. You will get pre-tax lease rental. Answer is 37,500. Yes or no? Write down on your own. Calculation of annual lease rental to match the loan option. Calculation of annual lease rental to match the loan option. Calculation of annual lease rental to match the loan option. Write down annual lease rental equal to, you write first NPV of the loan option, 87527. This is what I want under lease option also. Divide by 3.89 and again into 60%, means you are double dividing two times, by first by this, then by this. So the answer will come to rupees 37,500. Is it right? Now you will try few questions. Question 4 you will try. 7, 8, 9 you will try. 4, 7, 8, 9. 10 also, you're right. At least try. Now we'll continue tomorrow. 4, 7, 8, 9, 10.